Hi, thank you for joining me in my market report. My name is Mike, and if you're new to my channel, my videos, well, we create these videos on mortgage rates, what's impacting mortgage rates on any given day. Uh, it could be stuff from economic data, it could be from headline news, or sometimes there's just a change in the sentiment in the markets. And if you're on the sidelines, you may not understand what's going on and try to figure out what's happening and why it's happening. Well, I'm here to kind of explain these for you on every day in these videos, and hopefully give you the information you're seeking, especially if you're a person, a consumer who might be looking to refinance or purchase and maybe following mortgage rates where they're going. Hopefully these videos will help you out make an informed decision. If you're in real estate, maybe looking to figure out what's going on as well and be able to have talking points. And hopefully these videos will help you guys out as well. A little bit about myself is I am a loan officer. I do work with the national lender. We do loans in all 50 states. So we would love to be able to help you out with your refinance or your purchase needs. So please reach out on those. But we're also here as a resource to help you guys out in terms of any questions you guys may have regards to programs that might be available out there, mortgage rates, or the process and stuff. Uh, we're here to help you guys out. So please, again, feel free to reach out. Uh, Without further ado, we'll jump right into it. We'll start off with our economic data. We'll start off with the Philly Fed Index. This is kind of does the businesses and manufacturing in the Philadelphia region, and that for the month of January. So December's number came anything above zero is expansion. So we had a 15.4 in the month of December. Forecast is supposed to be an uptick to 20, and it exceeded that to 23.2. So that's actually very good news, especially on the heels of a contraction we had in New York the other day here. So very good news that Philadelphia increased. Now, every Thursday we get the jobless claims here, and last week's report was revised slightly higher from 238,000 to 231,000. Forecast was supposed to dip to 220,000. However, it jumped upwards to 286,000. Now, if you've been following my videos, we did say January is kind of one of those months where it could come in kind of crazy, that we'll see probably a spike in the jobless claims, and that is a lot of the times due to a lot of people working the temporary jobs, so seasonal jobs during the holidays, and then they start, then they get let go, and then they go on and apply for unemployment. So a lot of times we'll see a big spike. So we'll see some probably a little bit more normal. See probably February or March. We'll start seeing some more what the jobs numbers really look like. So stay tuned because these won't look too much, be too accurate. And then, of course, you got your continuing claims. As we don't really pay too much attention to this, but as you can see here, we did see an increase in continuing claims. So the jobless claims is first time people applying for the first time, and then, of course, the continuing claims are those who are still on and continuing. Existing home sales is another one we got here. We had back in November 6.46 initially million, and these are seasonally adjusted annual home units, and that was actually increased to 6.48. Now, forecast is showing it dip slightly down to 6.44 million, and it dipped much more down to 6.18. So that was a drop of 4.16% in there. So obviously, existing home sales didn't do too well in the month of December here. So let's go ahead and take a look at mortgage-backed securities. Headline news is not much going on today. We're still getting Q4 earnings reports, as that just began last Friday, to be precise. And we're still getting some of those out there, so those are affecting the stock market. And the stock market is getting some help on that regards. As you can see here, we're getting another day of increase here. So as you see here, this long wick here, we were way up here, and then we receded downwards. We didn't. I think we closed up around 23 basis points, even though we were up much higher, like over 30 basis points, almost 40 basis points. Same thing today. We were up almost 30 basis points. We subsided a bit. Now we're only up 16 basis points. But however, we are getting a little bit better pricing as a result today. So mortgage rates are showing a slight improvement as a result of that, which is obviously good news for those who are in the market for mortgage rates here. We did have the Fed did do their annual or their usual purchases today, which didn't really do much for us, because what we're finding is obviously there's not much appetite out there. So the markets are very illiquid, which means that there are very few buyers out there to try to be able to sell when we're out selling these. there's a few buyers out there, and there's just not enough players that want to buy into the equity and buy into the bond market here. So this is what we're kind of finding right now, especially next week. We'll have some choppiness because next week we'll have the FOMC. Hopefully they'll shed some more light on their specific plans as the clarity, the shift in Fed policy in terms of the balance sheet is what's been triggering everything of late. So here's what looks like the volatility today. As you see, we had a big spike earlier, and then we kind of dropped down. Now we've come back a little bit, but not enough to regain that spike we had earlier in the morning here. So next, we'll go ahead and take a look at 10-year Treasuries. And the 10-year Treasury is down a little bit. We were up at 1.87 range. Now we're down to about the 1.83 range. Still in that training range, so it looks like we could be stuck here for a little while. If it looks like there's really no test, it's not even testing the floor here, which is what we like it to do. We want to test this floor and actually come back downwards and hopefully come closer to the 25-day moving average. Same thing for mortgage-backed securities. We'd like to at least get closer to the 25-day moving average. And as you can see, it is moving lower slightly, so it's actually going to help it to close that gap that we have between there. At some point it will, but when we're just not certain quite yet because there's too much uncertainty in the markets right now, especially with the quiet, the silent, the blackouts basically that the Fed speakers won't be speaking until after the Fed meeting next week. All right, we're coming to a close here, but we'll take a look at the conforming loan limits pricing and basically, or the average rate for conforming loan limits. And the 30-year came in at 3.7, and the 15-year is currently at 2.96 right now. So as you can see, they've been continuously rising for some time right now. It's a lot different when I started doing this back around even like November and stuff, much higher. I remember at one point we were, at least a quarter to half a point lower on this than we, quarter to about half a point or percent lower, quoting much lower rates here. And what can we say? Rates are going up, and they'll continue to rise over the year. And we'll see long-term wise, but hopefully we'll have some positions in there where we'll have some improvement and at least some relief in there for those who are trying to refinance and be able to catch some of those breaks in there. All right, folks. Again, that's pretty much the wrap for the day. If you guys like these videos, please help us out. Smash that like button, share. We greatly appreciate, folks. If you guys got questions about anything, again, we're here to help you guys out. Please feel free to reach out as well. We do appreciate you guys, and thank you so much. And we'll look forward to see you guys in tomorrow's video. Have a great rest of your day. Bye-bye.